Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 10th of September. All right, now the ECB has come and gone. Obviously, no change of rates or anything like that. That was never expected. What we were looking for was some sort of signal about them starting to pull their liquidity or taper, basically their asset purchases, right? So this is very similar to what the US is doing and a few other countries as well. They're all sort of chiming in. Now, there was obviously clear, to me, it was sentiment that they weren't going to do anything because that's the way the dollar was moving. The US Treasury yields, the 30-year was up at 1.95, the 20-year up around 1.9, and the 10-year up around 1.38. They've all dropped back down, right, on the back of that. It looked like there was a bit of a surge in the US yields thinking the ECB wasn't going to do anything. Anyway, they've come out and basically told the market that they're going to start trimming their emergency support over the coming quarter or quarters. No immediate plan, but that's once again a bit of a boost as far as, you know, getting back to normalized markets where they control interest rates. So that's a positive for the euro, right? And that's put a bit of a slowdown on the whole, obviously the US yields, and the US dollar consequently has just drifted lower. Now, no real surprise. So the whole anticipation around that meeting was, what are they going to say? What are they going to do? But basically, there was no surprises. They've said they're going to do some. So that's why there's been no crazy moves here. And the dollar has just pulled back towards that support line, that short-term support line on the dollar index, right? Ready for the next major event, which is next Tuesday's US CPI numbers, right? On the major currency pairs, okay, if I just come across, we've had that once again. We get these initial moves and we don't get the follow on because we're not getting the connecting data. Like, what would have been good if the ECB had have said, look, we're not going to do anything, we just need to keep things going, then euro would have crashed lower. It goes with the initial sentiment, and then we get a nice clean move. As it is, we don't get that. So it just starts trading sideways from here. Big bounce back in sterling, right? And it's enough to stall Aussie and Kiwi as well. So basically the whole dollar block, or sterling's bounce, but the whole dollar block is now drifting sideways, okay? And that's going to probably be the case until we hit next Tuesday's US CPI numbers. The dollar pairs, well, dollar yen and dollar Swiss gave up their just recent gains, right? And dollar CAD sort of starting to trade sideways up in the boondocks, right? In the middle of nowhere. So this is the thing. So when you identify that, right, this sort of what's going on here, less so sterling, we're starting to see sort of range-bound markets come back into play. Traders will generally know that nothing is going to be more important than next Tuesday's US CPI numbers. So with that, the range trading starts to sort of move around. Ideally, you'd love to have some sort of close support or resistance to work with. At the moment, a few of these pairs are in the middle of nowhere. So we just have to sort of wait. If anything, you're really just adjusting your trend lines to the new lows that we've just seen, right? Probably a bit early to move the euro, but sterling's got it there. Aussie's bounced a touch. So traders will be just adjusting where these support levels are to try and gauge where the next levels are themselves. I'll just move the euro while I'm there just so you can sort of see what's going on. And this is the picture, right? So I do expect these things to trade sideways over the coming week. Let me just zoom that out so I can get the low. And that's exactly where we are. So range-bound trading, I would suspect for today. Keep a close eye on US equities. I mean, US equities, US treasuries, right? The treasuries were the driving force for the dollar strength. That's now corrected itself. That's why the dollar's come back to where it was. I don't think we're going to see too much out of the treasuries just yet. There's been some mixed comments coming out of various Fed officials, basically saying we're not out of the woods yet. We can't do this. We can't do that. Some saying we should go. So that's the mixed bag that you get at the Fed. Jerome Powell has given us the clear plan, maximum employment, but the CPI will be a deciding factor. Equity markets, well, they're slightly off, but not by much. You'd think with the yields falling, I would have thought equities would have rallied, but they haven't. Bit of discombobulation between the various financial markets, and that happens, right? They connect, then they disconnect, connect, disconnect. It's always happening. Where are the currencies left at this point? Well, they're sort of like just as I said, trading sideways, wondering where the next move is going to come from, right? And once again, connecting the dots, you come back down here, and this is where you can start to piece a few things together. You got some with that big move in sterling, right? Yesterday, have a look through the some of the UK data coming out. It's worth having a look. And if this goes with the general sentiment, well, then that's a good thing. What you're looking for really is the GDP estimate and also the manufacturing production numbers. They're an aggressive sort of number, manufacturing output. That's the same thing. And so sterling definitely on your radar for Friday trading. During that North American session, good chance to bring dollar CAD into its own, CAD and CAD crosses. Check that out. The employment numbers. Well, the Bank of Canada met earlier in the week. They were saying, yeah, growth is dipped just at the moment, but it's going to come back. This is where the employment numbers now overlay that on top of what their general sentiment is. We should get some movement in dollar CAD. If the employment numbers are really good, it goes to supporting what the Bank of Canada are talking about. You probably see some Canadian strength. If the numbers are weak, well, it really puts a bit of pressure on the Bank of Canada going forward from here, and you'd probably see some weakness in the CAD. So I think the Canadian employment numbers really have a chance to get some activity moving on just by itself. There's no non-farm payrolls to corrupt the number, so have a look through that. So sterling and dollar CAD, your two probably preferred pairs as far as potential opportunities where we'll have clear momentum if we get the right data. Outside of that, range trading for the rest of the pairs. And as I said, keep a close eye on the rest of the markets, see if there's any direction coming from bonds or equities. I reckon they're done for the week, right? And you'll see when you come back over here, if you do have a news service, you'll see all these news pages. They'll start coming back towards focusing on the US CPI numbers next Tuesday, probably as soon as today. Once we get into that North American session, that's what will be coming quite prominent. And those jobless claims near 18-month low, yeah, that's great. The last numbers were really weak, so just offsets a bit of that. So anyway, that's where we are, guys. It's nothing dramatic. The good thing is we've got structure with a lot of the pairs. You just need to sort of wait for the momentum to come in so we know where they're going. At the moment, well, the last couple of days, it's been a bit weird trying to work out where all these currencies were going. We did have clear direction from the US bonds. That's now gone. So we have to sort of start to work out again, where is the next direction going to be for the majors? As far as the individual currencies go, the dollar block, that's where the CAD and sterling come into play today. All right, guys, have a good one. Cheerio.